The final piece of the economic jigsaw ahead of the election is about to drop into place. It's the latest quarterly inflation number, which is key to checking on cost of living and the possibility of future interest rate reductions. Our business editor, Ross Greenwood, is with me for this. Ross, what's expected?
Well, it's going to be an unusual inflation number today, and the reason for that is because of energy rebates are going to be dropping off. One of the key ones is going to be the Queensland $1,000 that was given to people there. We'll see this very shortly. So forecasts suggest that maybe inflation on an annual basis will actually rise. We'll see this in just a few seconds' time. But the underlying rate of inflation, which the Reserve Bank watches, that's likely to fall just a little bit. So it's going to drop in the next couple of seconds from here. Let's just have a quick look and see what it looks like. So it was previously 2.4% and it's come in spot on at 2.4%. So inflation is steady regardless of those falls in those energy prices. And so this is going to be an absolute key. The one thing we'll watch very shortly is the financial markets and see how they've reacted. We'll also pick up something from the money markets as to what the expectation of interest rate cuts might be. But the one thing is that, as many people have said in the past, that maybe inflation is not dead in Australia's economy. So we'll pick up some of the details as we go through, Kieran, but just the headline is it was expected to basically be a little higher as a result of, or rather lower as a result of those energy rebates coming off. And in actual fact, what's happened is that the rate of inflation is rock steady at 2.4% on an underlying basis.
And what are the key prices in this mix? I know they've sort of stayed steady, but there are some moving parts.
So let's go through some of those bits and pieces. And so we're going to see really, again, the latest releases as they come through. So for the March quarter. So what I can tell you is if you've got on a quarterly basis inflation up by 0.9%, so that really is all about those energy prices coming off. So that means for the inflation number to be steady, other prices are starting to ease off a little bit. So having a look around the place, say, for example, over the past year, alcohol and tobacco prices up by 6.5%. You've got things such as education prices up by 5.7%. You've got food, non-alcoholic beverages. We saw Coles sales results out today sitting up by about 3.2%. So there have been some things which continue to rise in price, but things like household equipments and furnishings in the last quarter down by 0.9%. Recreation and culture down 1.6%. Communication down 0.3%. So there are prices starting to fall in Australia's economy. So this is pretty important to note this. And as we go through a bit more detail as to what is coming here, what they're saying is that the CPI has risen 0.9% on the quarterly basis. So if you annualise that out, that shows that inflation is again back above the Reserve Bank's preferred band of 2 to 3%. But as I indicated a little earlier, it is that underlying rate of inflation that is so important. And that's coming at 2.9%. So underlying inflation, which the Reserve Bank watches, now for the first time in several years in the band of between 2 and 3%, which potentially opens up the prospect of interest rate cuts from the Reserve Bank.
So, okay, let's dig into that a bit as we think about the Reserve Bank's Monetary Policy Board interpreting this in a couple of weeks from now in the context of this number, but also the chaos that we've seen on the markets worldwide.
Yeah, so just giving you a small hint on this, they've just paired just slightly the prospects of interest rate cuts. Now, it was a foregone conclusion pretty much before this inflation number dropped that it was 98.6%. It's now 96.6%. So to give you some sense, it's come off a touch, but it hasn't come off a lot. So there's going to be a 0.25% rate cut when the Reserve Bank meets after the election, May 20, that will be. But what the markets are saying right now is you should not be penciling in a 0.5% rate cut. It might also, out in the longer term, also ease off some of the prospects. Just having a look here, see, these are some of the annual changes of some of the key products here. And you can actually see that energy prices down 11.5% there. That's the key one. And the reason for that is those energy rebates basically starting to come off. But energy prices broadly have fallen across the nation over the past year. And so that is actually taking away from from the inflation rate overall in Australia. But again, this is still leading to the prospect of interest rate cuts. The markets are penciling in 4 interest rate cuts this year. They're still there. But as I say, off the back of this number, just easing off perhaps the prospect of a 0.5% rate cut when the Reserve Bank next meets in May.
Ross Greenwood, thank you.